Aloha, my friend. I hope you're having a fantastic day, whatever day it is you're watching this. And I hope, if you're not already selling cash secured put options on stocks you'd be happy to own, I hope you're on your way to doing that. At the 1 minute mark of this video, I'm going to leave you a link right here that will be a link to a different video. And this different video will give you the unfair advantages of selling cash secured put options on stocks you'd be happy to own. If you want a little more insight into how you might be able to successfully achieve this, browse this website right here. There's free stuff, which consists of this playlist and some downloads. There's more free stuff. Boom! Right there at that 1 minute mark, right? That's on the YouTube channel. There's paid stuff. We can work together one-on-one, assuming you're willing to pay the price. Because that's how life is. Pay the price for certain things, you get certain results. Speaking of results, let's look at the results of some trades that we have here on these different ETFs. We got XLE, Energy ETF. This was the last day of this contract being open. Our strike price was $84. So that means if it expired higher than $84, then this contract expired worthless. And look at this. It expired a little less than $85. That means we keep this $24 minus a commission, and obviously that's before tax. And then it expires worthless, and that's it. Then we just move on to the next one. How about with XLF, the financial ETF? Same expiration date at the 32.50 strike. Look at this, 33.22. That means that this also expired worthless. Yesterday, I had a video of selling this put option for a 1 DTE, 1 day to expiration option, and I'll link that video right here at the 3 minute mark. It's coming up at the 3 minute mark. Get ready for it. You can see it right, boom, right there. So if you want to watch that when this one's done, it'll be yesterday's video, and I'll go and sell that XLK technology ETF, 1 day to expiration. So we just opened it, I think just today, right? Look at this. Yep, opened it on the 21st. Expires on the 21st. And I didn't know if it was going to get opened or not. I put the order in. The order got filled. We took in 19 cents. There's no more days left to expiration. It shows here that there's 4 cents left on the contract. Tomorrow, I will see if that 4 cents goes to 0. I'm guessing that's what's going to happen. Our strike price was $146. And the stock closed basically at 147.76, so that's expiring worthless. Everything is expiring worthless here. This never got filled though. So with this video, we'll spend some time looking at this looking at this to set up a order that will potentially put in the market today on Friday. And one reason why I'm doing this, because Sunday, this day, right now I'm in Hawaii, but I'm flying to Arizona. So Monday through sometime through here, I'll be in Arizona coming back. So one of the advantages of doing this strategy is that it's very low maintenance. I can put some trades on and not have to worry about much over the course of the next couple days because it doesn't matter if these would expired instead of expiring worthless, if they would have expired in the money. I still keep the 24 bucks, and I take 100 shares of XLE at a strike price of $84, which I was happy to pay for it. And then on these, I'll just start selling covered call options. So let's take a look at XLF. Here's XLF right here, and if I click this X, it's going to exit out of these positions. But I don't really want to close these positions that way. So we'll go over here, change this to XLF. And let's do this. Let's take a look at, this is 1 day, 5-minute chart. With this being right in here, this was from yesterday. So why 1 day, right? I get it. I don't know. It's kind of how it's set up. It's still trading on these after hours. This is the after hours time. I don't really look at that too much, but hey, what the heck? Let's just take a look at it. So we see it drop down just a little bit. It's really been kind of in this range. Now we're looking here at 2 days on a 15-minute chart. Right here's 1 day. It kind of got up here to this 33, 50-ish, about 33.5. Gaps down just a little bit from here to from 33, about 33.40, down to about 33.20-ish, somewhere in there. Up down, kind of ends, sort of went sideways. I get it. It's not exactly sideways, but it's definitely not a strong move up or down. And here we go. And then today opens here and basically really went sideways. Next one, we're looking at 1 hour charts for 5 days. And for this one, let's take these after hours. Equities, show extended hours. Let's take that off. All right, let's look at it like this. Okay, 1 hour, 5 days. Got a low of about 32. All right, get an idea of what's going on in the hourly. Now we're looking at 6 months, 1 day, and it's 33. Maybe it looks like it's catching some support right there. Yep, not a surprise that it's going to catch a little support at 33. Now, normally when I'm doing this with a stock that I'm using real money, I go through a certain amount of fundamental analysis process to get an idea of how much I'd really want to pay. I'll pay for this stock, and a little harder to do on. Actually, I don't know if it's harder to do. I've never tried to do it on ETFs. I've really only done it on companies, because they have earnings and these type of things. So not exactly sure how to get a fair market value and what would be overpriced, and sort of like that Benjamin Graham kind of Warren Buffett way of what is a fair value and what's a good deal for a particular asset based on earnings and dividends, cash flows, all those type of things. So what we're doing right here, we're just kind of being a little more playful and going through the motions of actually trading, a bit of the wheel strategy more. So one thing that I'm noticing is, I'll let these close all these up here. Where I was trying to sell quite a bit away, right? The 30 strike, and that's all the way down here. We could get filled on that, but probably for $7, we can do this. Close this up. What's the highest? Okay, the highest that traded for today was 9. The lowest was 6. And the mid right here between 6 and 8. So one thing that we'll do in preparation for me leaving, we'll change this one to, let's do this one at 8 cents. And then this one from 20 cents, let's change this to, let's go with 12. I'm just kind of randomly selecting something there to see if on Monday, if it drops down a bit. So it's significantly lower than what I was trying to get filled for, 20 cents and I think 15 cents. And let's see how that can go. Let's keep looking at these charts a bit. So now we're looking at a 1 year, 1 day. You see through here, it seems to have some support resistance in the 33 area. Also here at the 32. So we're trying to get filled at the 30. And looking at the weekly, right here's our 30, which we would like to sell something there. There's some resistance support area. Here's a monthly. Whoa, that 30 really stands out when you see it when you're looking on the monthly, huh? And I think we looked at the volume. Moving averages. 9, 20, 50, 100, and 200. We see we're starting to get a strong movement up through here, but we got that death cross. So what's going to happen? Is the death cross going to be in full effect? Just kind of starting. What's going to happen? Pulling back a little bit through here. So we'll have to see how that plays out. But let's also let's look at maybe selling. Let's see if we can sell a 32. So right now, what is our timeline here? We're looking at an expiration date of May 19th. So on the cone of probability down here, we're going to find May 19th. Boom, there it is. Now on this side is the price. So on the bottom, we got May 19th. Look at that, outside of the cone of probability. It's a relatively low, based on this, it seems like it's a relatively low chance of this expiring, of us getting assigned with this. So let's do one where we got a little bit higher chance of getting assigned, right? And based on the delta, it's showing us about roughly about a 7% chance of getting assigned. What about at 32? About a 24% chance of getting assigned on this contract. But let's go a little bit shorter date. Let's look here at 13 days. 32, about 18% chance of getting assigned. Highest that sold today was 17, lowest 13. Look over here. Let's double check that. The 13 days expiration, May 5th. So again, we're going to find May 5th down here in the bottom. Boom, May 5th. Where's 30? Find the 32. There we go. Boom! Putting it right inside there, right? Doesn't mean it's gonna get filled. It doesn't mean we're gonna get assigned, but it's you can see it's definitely increasing the probability. So let's look at doing that. 32. See if we can open up one for. We'll do. Pardon me. Let's go up to. Now let's see if we can get it for. Let's go up to 20. Change this to good till cancel. That one, it would really have to drop or volatility. It would have to really drop, and or volatility would have to really increase probably for us to get filled on that one. Let's do another one for what was it? Was it 17? Was the highest it sold for? Let's do another one for. Let's try one for 15. Open orders. Okay. And we'll do one more. Let's do one over here at the third. Well, let's look at the chart real quick. Right, if the expiration date is May 5th, and what would be kind of on the edge there, a little bit close. How about 32? That's a little bit inside of there. Oh, we're already looking at 32, aren't we? So 3150 would be out here, outside of that one standard deviation. 3150. You guys want? What should we do? Which one? Let's we got two that we're trying to get filled for in there. Let's just do this at the mid of 13. All right, we're kind of increasing our chances because this has been what? Like, this is going to be maybe we cycled through sold two different times. We had put options expire and we haven't got a sign. So it's, you know, I can sell, me personally in my real account, I can do this for a long time and just kind of stay on the edge here, right? And look at all these different things. Look at the volume profile. Look at the conal probability. Look at the moving averages. Look at big picture, medium picture. Start looking at a smaller picture and go in the micro time frame if I want, and sort of stay at the edge and only get assigned if it has a big pullback, right? I can do that, or let's for this let's do this, right? We'll do that, send that in there, and let's see if we can get filled on or assigned on something, so that way I can write some covered calls and have some fun. So what do we have going on here? All right, okay, great. We should have we got 2 in there. We should have 3 in there. Let's call it a day for that one, and then maybe tomorrow I'll check this out and see if anything changed here. What's going to happen with this extra 4 cents? Looks like it's already disappearing on us, but we got 4 cents profit and loss since open. I'm guessing maybe 7 p.m. Let me check the Eastern Standard Time Zone. Notice how that changed. It used to have more information here, like the trade price. I think it was 24. Nothing's showing up. I guess there's a good chance it's midnight in Eastern Standard Time. It's actually an hour past midnight, so we're into Saturday in the Eastern Standard Time Zone, where it's still Friday over here. So maybe we'll check that out. Okay. Now remember, I got the 1 minute mark of this video. You got the unfair advantages of selling cash secured put options on stocks you like to own, and at the 3 minute mark, you got selling the XLK for the 0 DTE option. Aloha.